Good evening. I'm Dan Fitzpatrick here at StockMarketMentor.com on Thursday, February 20th. And here I want to look at Alegion. Just like a random company, 2.5 million shares traded, so that was a good thing. But why am I bringing up Alegion here? It's not exactly one that we follow. It's because one of our members in the forum today mentioned this as fitting. I wasn't watching it, but it's fitting into the IPO analysis or framework or strategy that I use in trading IPOs. And basically, this is how it works. First of all, we start trading here. So guess what happened today? All-time high. Yippee. Stock also broke out above this level, and volume was really solid. So this is a good breakout. This is a valid breakout. But here's the analysis that I tend to use. You know, wherever the stock goes when it first opens for trading. In the case of Palm, of course, it went straight to zero. Hence, why you don't want to buy an IPO when it first is PO'd. So after the stock, though, pulls back from what I call the enthusiasm high, otherwise known as lemmings running in to buy stock from smart people, the stock, if it's one that you're ultimately going to want to buy, this is how you do it. You look for a bottom here. Go ahead and trade it all you want right here, but this just isn't fitting into my strategy. You might be a viable trade. More than one way to trade a stock. I'm just showing you mine as far as how I look at IPOs. Ultimately, you hope the stock bottoms, but again, we're just watching it here. Again, if you want to buy it here, great. You're just buying it because you're buying it. You're not buying it because it's a part of the strategy of analysis that I talk about. Stock a lot of times will come up and test this level and look at a bunch of charts. You will be amazed at how many times the initial push doesn't go through. Sometimes it happens 2 or 3 times. But ultimately, an IPO that breaks out above this enthusiasm high, and I'm not just retrofitting this to this chart. Again, just find some charts and look at them. You'll be amazed at how many times this happens. Once the stock breaks out, it keeps moving up for a bit. When it finally rolls over and pulls back, guess where it will find support? At this prior resistance level. Again, happens all the time. So here with Alegion, the real buy point, the first buy point was here. Like this was a signal that the stock was breaking out, all-time high. And then what you want to be doing is buying on any pullbacks. Like here, good buy point. This little drift sideways, good buy point. And you could say, well, right here. Okay, fine. We're not that much higher than that right now. So the stock's been trading sideways. Today, this thing broke out on high volume. Bottom line is this. I think you can buy the stock right now, not to make money on it tomorrow because, you know, it might pull back a little bit more. But I think you can buy the stock now, and as soon as you do, just step back. If the stock winds up trading, say, below the 20-day moving average, which is 48.90, so you got like $3 here, then you want to rethink your position. But for now, I think Alegion is one that works. So kudos to the member who brought this up today in the forum. I'm giving it to everybody. Okay, members, let's go over and look at Priceline and Tesla and Facebook and Groupon and a few other stocks that are moving pretty well. We'll figure out what we're going to do tomorrow.